Hi, Mr. Ranga. Thank you so much for joining us on Blitz Business. It's such a pleasure to have you.
Thank you.
Awesome. Let's get started. So, I was looking at your profile and I was very impressed. You started your career with hospital. What's the transition from hospital to IT like?
Yeah, you see, at the time I passed out of post graduation, hospitals were just about corporate hospitals were just being given, hospitals have been just given a corporate status and they could actually raise funds and had the luck of working with one of the pioneers, Dr. P.C. Reddy, in establishing the second hospital at Hyderabad. So I was quite excited to join a new industry and I worked there for about 4 years and been a marvelous learning experience with regard to establishing almost a trend setting corporate business out of healthcare. And from there, I moved on further and I thought that I should learn a little more. And the next 10 years, I focused on management consulting. And then in the late 90s, early 2000 is when we transitioned into IT. So it was a long journey before getting into IT services.
So, in your current role, what are the things? What's your day to day look like?
Okay. Primarily, three things occupy me. One is in terms of understanding as to what is it that we should do to stay relevant and create impact at the customer end, primarily looking at what is the emerging demand and how is it that we could respond to that in a most effective manner. The second thing that comes is customer relationship management, and thus, with that relationship, be in a position to actually scale the company's revenues. And then comes the entire associate satisfaction. These are the three things that are dear to me. And in my role as a CEO, these are the three things that most of my time gets invested in.
So then moving onward, so tell us a little bit about Maverick. What was the genesis, how it started, and currently what all things you guys do?
Yeah. Mavericks, we established Maverick in the year 2000. And the idea at that point of time was to try to offer a niche service to banking and financial services industry. And when we started at that point of time, the competency that is required to serve a banking client in an effective manner was quite fragmented. Some people knew technology, some knew the business or the banking domain, and a third set of people knew the products that were used in the bank. So it is something like if you do a project, you need to actually have the domain knowledge, the product knowledge, and that technical competency. Often we were finding in the early days in 2000 that each competency resided in a different individual. So to an extent, it was not a very coherent competency. So the first thing that we did is to identify and build a layered competency wherein a given individual who knows business domain would at least know the product or technology, one of the two, so that you actually have a person having at least two out of the three competencies that are required to make a significant impact. So we focused on that layered competency building and one service at a time over a 15-year period. We built starting with what we called as business acceptance testing, wherein we would actually, on behalf of the business user of a bank, we would look at a software or a product that has been customized for use in the bank by the IT service provider, and we tested it and made sure that it has the requisite functionality, it has the requisite ease with regard to usage, and it has no risk with regard to it being brought into operation. So that was the first service that we have built. Post that, we added to it the entire customer experience offerings, primarily the digital offerings. Subsequent to that, we went on to add entire data quality and data engineering competency. And finally, we also moved in and built competency around select banking products with regard to their implementation, upgrade, and maintenance. So this was almost like a 20-year journey to build these four services. And in essence, as a principle for the last 25 years, Maverick focuses clearly in making a choice to be having depth as compared to width in our offerings. So the kind of services that we build are deep with regard to domain, deep with regard to product knowledge, as well as technical competencies that is required in that particular area. Similarly, there was a choice to be made. Do you become multi vertical, or do you really focus and specialize in a single vertical? We made a choice to be focused over the last 25 years to a single vertical of banking and financial services.
So typically, if you help us understand, so what are these products you have in banking?
See, we have services, so to say, as compared to products. We have services around implementing products, be it in the space of, say, the core banking itself is a competency. Similarly, in the retail space, we have competencies around lending. We have competencies around cards, that is credit cards. We have competencies with regard to retail and corporate payments. We have competency with regard to trade finance and transaction banking. We have competencies in wealth management and investment banking. So, to an extent, while we built four services over 25 years, even with regard to the banking lines of business, we started with retail, then we came into institutional banking or corporate banking, then we came into HNI and wealth management, and then we moved into capital markets. So, to that extent, four services spread across four different LOBs of a bank is something that we've been doing. More importantly, over the last 25 years, our focus has been running and projects are delivering projects on the change the bank side. Typically, the IT budgets in a bank are allocated in two buckets. One is called change the bank, the other one is called run the bank. Run the bank is more with regard to maintaining the systems that have already been built, whereas change the bank is primarily building new applications and new software in order to actually introduce new products or enhance the existing products to be more effective. Thus, we have deep understanding and experience with regard to banking transformation as compared to run the bank. So then,
Moving ahead, so this is the core vertical for the company, or you guys are entering into other verticals as well?
See, we dabbled in insurance in addition to banking and financial services, an associated vertical with its own complexities and with its own uniqueness is insurance. So, in that, we did have a reasonable play, and we continue to have a reasonable play in the property and casualty part of the insurance vertical. So, apart from this, we don't really dabble in any other vertical.
Understood. And in terms of, so for you, what is the biggest challenge? Like, what are those biggest challenge which keeps you up at night, which keeps you making think, oh, how do I do? How do I solve?
See, what keeps us awake is to ensure our deliveries are exceptional.
Mm-hmm.
See, we're a firm with about 2,200 people, and we normally compete with the big five in the IT industry, be it the Indian big five,
Mm-hmm.
or be it the global big five, or the people that we compete with. So, if for a period of 25 years to compete with them and actually succeed in actually taking a good share of banking transformation business, it means our deliveries need to be exceptional. So, to that extent, most of us, whether you are in the sales or account management or delivery, the larger interest and subsequently attention is paid to the way we actually do manage our deliveries, so that we actually create an impact which is quite different from that of the rest of the competition, and thus remain in the what you call good trust of the customer. The second thing that really takes our attention, most of the leadership attention, is the solutioning meaning understanding proactively what are the issues at a client place, and subsequently experimenting to mature certain offerings which would give a customer a head start with regard to solving the problem, rather than going and trying to do a problem solving from the scratch, developing certain frameworks that specifically address the key issues, be it with regard to entire customer experience related challenges the banks face. The second most important thing that we focus on finding solutions is the entire compliance and regulatory issues that the bank faces. And the third one typically is on how banks could actually look in terms of maximizing their revenue while minimizing their costs. So if you really look at our solutions, they come in these three buckets: customer experience related, regulatory and compliance related issues being solved, and revenue as well as cost management aspects. So these are the areas that we focus on. So one is the exceptional delivery. The second thing is proactively building solutions that could address the key issues related to customer experience, regulatory, and cost and revenue management.
In terms of delivery, I think that's a very critical one, right? In terms of to meet the customer expectation, and we all know Indian customers can be demanding.
Yeah. Not only, no customer is, we all think that customers across board are quite demanding, and that's where they should be.
Hmm.
So from that angle, we also have a policy of working with very select customers. And typically, we use three segments with regard to making a choice of a customer. One choice is related to the global top 10. We work with four of the global top 10 banks at this point of time, and we aspire to add one bank every 2 years. And the sweet spot, that is where we have maximum exposure, is with the regional leaders, be it in APAC, be it in Middle East, be it in UK and Europe or US. The second category of customers that we work who are larger in number as compared to global top 10 are the regional leaders. The third segment that we work with, where our exposure in terms of revenue is not much, but the challenge is really high, is the fintechs. The fintechs are usually having a culture wherein they really use bleeding edge technology. And more important than technology, the speed at which they execute is exceptional. So, by virtue of working with the global top 10 and then the regional leaders and then the fintechs, the kind of demands that each one of those segments places on it is quite different. And the contributions that we make and the learning that we derive out of that is also quite different. So it really makes our teams grow holistically while understanding all three segments and catering and keeping good, what do you call, impact across the three segments.
And you have a bigger exposure in India or internationally?
Come again, please.
Do you have a bigger exposure in India in terms of customer base, or the bigger chunk is international?
See, it's a good story. Between 2000 and 2007, we had maximum exposure to domestic market. And we had, apart from the domestic market exposure, we had maximum exposure to financial services product companies, global product companies that had a base, a product development that happened in India. Between 2008 and 2024, we pivoted and we have at this point of time maximum revenues coming from UK, EMEA, and US. So, to that extent, India revenues today would be less than 15% of our revenue, whereas 85% comes from Middle East, UK, Europe, and US.
Wow. I guess it's a good time for you guys since dollar has 85 to touching 88, I don't know, 87 point something. Yeah.
See, over the last 25 years, if you see, that has been one way in which IT firms did have a benefit. But in the current context, I actually see good times because the technology maturity over the last 2 years has been quite rapid. You must be already hearing enough about AI, ML really coming of age and thus becoming far more, what you call, accepted, even in a regulated industry like a bank. So, from that angle, we see this as a time wherein quite a bit of change is going to happen with regard to the way software is delivered or developed, maintained. Similarly, we also see quite a bit of change with regard to the way the pricing models in software services, IT services are going to evolve. So, we look at this as a time wherein there's going to be a kind of a level playing field brought about between smaller players like Maverick as well as the large system integrators who have been to a large extent having a exceptional influence over the client's spend. So we actually see it as a time wherein all IT services are required to re-engineer themselves. In a way, they come out with the new delivery models and pricing models.
So I wanted to ask you this thing in terms of you guys have good enough strength, 2000 plus people working for you. There was a recent comment by L&T chairman in
Mhm.
terms of working hours. So what is the policy you guys have? You agree with the certain amount of working hours, or what is the way to navigate this scenario? Because even Narayan Murthy commented. So what is your take on this?
See, it is not about working hours. The first thing I would say is that if you like some job, time is something that you make for it. And similarly, if you are committed to your personal life, you make time. I'm actually seeing it a little overstated debate that's going on. There is no either or in terms of how many hours to work. Sometimes you stretch, sometimes you take time to manage and attend to more important aspects, personal aspects. I would say that 40 to 45 hours in a week is something that most of us spend. And it's not about 45 hours. How you spend and with what kind of focus that you use that 45 hours is the question. It's not that Narayan Murthy in the past, now JP Morgan CEO in the recent past. Basically, at a point of time, the system always need to respond to the people, but it doesn't mean that a system needs to adapt to anything and everything an associate asks for. So I'm actually a guy who would say that leadership is not about following the followers' wishes. We need to be having an ability to choose a middle path that is beneficial to the team at the same time that takes sufficient sensitivity to accommodate individual requirements. So there is a balance that one has to have. And I don't think that, like, I worked with the Aisha Group in the past, and Mr. Vikram Lal, who was the what do you call the CEO of Aisha Group, used to tell us that India doesn't have an ability to take a 5-day week. I'm talking about these. So you need to read it, any statement of a leader in the context. Like if you take Vikram Lal's statement saying that India can't afford 5-day week today, it looks funny. But in that context, it was definitely something that resonated. So to that extent, I think it's a debate in which there isn't like one person who's right. There got to be a middle path, and we need to do what's best for the team rather than just the individuals.
And there is this big another critical topic which is in this space is the fresher salaries have not increased, over the past so many years. It is almost same. I mean, 2002 till now, give or
Mhm.
take, maybe a lakh have increased, but it's barely to survive. I mean, that's the
See, if you look at it, that 0 to 3 years of experience, people's salaries have not increased substantially over the even last 5 years, let's say. They have increased, but they have increased in line with the inflation or something like that. But the minute you cross the 3 years of experience, they have exponentially increased. Even if you take medium range, like pre COVID and post COVID, if you take, they've doubled. So my reading is that the universities are producing certain base material. The first 2 to 3 years of experience is being actually seen as the real learning for the engineer, and thus his value with regard to the compensation, things like that, is actually not seen as growing in the 0 to 3, but it really doubles as compared to pre-COVID the minute he crosses the 3 years of experience. And at entry level also, if you see that they have definitely increased, if not substantially, at least an average of 20% over the last 4 years. Like for example, you are looking at average entry salaries in excess of average across board, if you take in excess of about 4.5 to 5 lakhs.
and then there is this bigger debate. Like one reason someone gave recently who came on podcast is we have too much access of talent or base talent, right? And the demand is not there. If there would have been more demand or lesser supply, we cannot cut the supply now. Everybody is an engineer in
Yeah.
one form or the other. So how does can India create more demand for such jobs? And now AI kicking in, there is another story brewing in. So for a candidate who is coming out of college, fresher, tough times. What do you think?
See, I'm more hooked on to banking financial services. I would definitely agree with you that over the last 4 years, if you take, like demand really has been very muted. And last year was a little better. That is 24-25 financial year was a little, it showed up a bit. And 25-26, we are seeing it increasing further with regard to as compared to the previous 3 years. So you're right when saying that demand has been muted. And thus there has been an issue with regard to accommodating the kind of talent that we are creating out of the universities. However, if you look at other industries across board, if you take, even if you take the entire small and medium scale utilization of IT, like you, there has been a tremendous growth there. So if you look at certain segments, there has definitely been a growth, especially even if you take domestic as a focus, that there has been a growth. But only thing is, yes, I think we have produced, or there is a supply side which is far in excess of demand at this point of time. And more important than that is that alignment of the people who are coming out of the university with regard to the contemporary tech competency that is in demand. That adjustment, if you make, that would also make a good, like it'll make the situation far better. And I've already seen some of the, what do you call, top 30% of the institutions have already perceived that, and they have been realigning their curriculum in a way that they actually produce people with the right competency who could be utilized in the current scenario. So, from that angle, I see an adjustment going on over the last 3 years with regard to the curriculum and the industry demand.
And Mr. Ranga, have you seen a trend wherein if you are hiring Gen Z, different sort of working attitude or something? Any 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 observations or insights?
Yeah, naturally, Gen Z is far more vocal to begin with. They have ideas and they would like to actually express far differently compared to somebody who passed out of campus 10 years back. So naturally, it has a kind of a situation wherein if you are in a reasonably open culture, you are in a position to actually get the Gen Z to like really contribute. And it also depends with regard to the kind of dialogue that you have as a management culture. So many a times it is like, I direct and you follow versus we dialogue and we decide. So the cultures or the companies that have the dialogue orientation are definitely in a position to, number one, attract, and
Mhm.
more importantly, very impactfully utilize the young talent. While people normally say that it is not very wise to actually have a kind of a, what do you call, interest with regard to young talent, in Maverick, we've always betted on young talent. In any other place, if somebody asks that they need 8 years to do a particular role, by force we said like we 5 years is enough, as long as he has a kind of a burning desire to do that role. Let's get him in 1 year's time he would actually be in a position to learn and then subsequently perform. So from that angle, Gen Z is really pushing themselves hard. Whatever be the popular opinion about them, there are people who take themselves very seriously, and they're also very committed to proving to themselves that they're actually capable of achieving what probably our generation achieved in a much longer time. There are people in a hurry. They're also well qualified as compared to, say, people like me when I passed out in 90s. In fact, they make the work environment very lively.
That's very interesting view. Recently, I forgot the name of the founder who said he doesn't like to hire Gen Z. He said it's a nightmare.
I think he'll have a problem with his son and daughter.
That's true. And then sort of then moving on in terms of this AI. AI is like everywhere now. You guys must be using, implementing use
Yeah.
case. But the bigger topic on AI is in terms of we also get many questions in terms of will it replace me, not replace me? I have to relearn, rescale, all these different sets of stories. What is your opinion and take in terms of where are we heading?
Yeah. See, at this point of time, most of our clients are committed to AI with regard to enterprise side and low end operations, back end operations side in a larger way. It is something like quite repetitive, rule based back-end jobs, as well as certain jobs that are labor oriented in the enterprise side, like that of your sales, your HR, sometimes even in the accounting aspects, is something that clients have quite extensively experimented and are in a position to get benefits out of scale, which to an extent definitely impact the overall headcount in the operations. The second area where a lot of experimentation, to an extent even scale implementation, has happened is with regard to the inbound customer support requirements. Inbound means when a customer calls in, and there is lesser investment or lesser application at this point of time on outbound. Outbound has, it's not just a what you call a repetitive activity. It would also have some analysis to be done. So some analytics are involved with regard to outbound. So outbound is just about shaping up. More importantly, most of the decision support requirements, especially in the middle office of the bank, is yet to actually get a sufficient investment with regard to application of AI. So by and large, if you see backend and the customer service part of it and the enterprise part of it are active. And here the job is a little less complex, especially where they've applied AI is places where job is less complex and more repetitive. There you will definitely see AI to be having some kind of a what you call ability to displace people. But when it comes to the middle office and more complex jobs, I actually see AI as a decision support rather than something that would altogether replace a qualified professional there. He's actually going to be made more impactful as compared to having to see it as a thing that could replace a professional there. So the low end operations definitely, which are repetitive and which are straightforward, are things that people are doing and that is impacting headcount. Now, you need to also look at it from the productivity angle. My own marketing department in a position to respond far differently today to anything that we ask with regard to either a competitor analysis or with regard to trying to actually build collateral, be it video collateral or what do you call when electronic collateral, is something that we are in a position to do far more effectively with far better quality. So from productivity angle, definitely reskilling of the team is becoming important. In our own case, all our associates, whether they are in delivery or otherwise, we are launched a program wherein they get familiar with the tools that are relevant to their function. So that reskilling is a minimum requirement. And I think firms should own it in earnest so that they get the right productivity out of their teams. And more importantly, they also try to leverage what is available in the market for their own, what do you call, impact. So my own view is that I'm not, there definitely are going to be displacements of jobs, but I actually see equal amount of jobs being created as long as you are in a position to adapt and learn the AI tools. You don't need to be a scientist, but you need to be a practitioner of the tools.
And on a lighter note, one thing at least I have seen, you must have also seen maybe in terms of in our software company, everybody's writing excellent emails. English has improved tremendously thanks to Chat GPT and all.
Yeah.
So that is also happening. Then sort of moving on for Maverick. So how are you guys financed? Have you taken any debt, loans, capital, fundraising?
See, over the last 25 years, if you see, initially we were funded by, see, it so happened that we used to be in management consulting before we started Maverick. So we used to advise at that point of time a very progressive IT firm. You would have heard Polaris,
Yeah.
headed by Arun Jain. So I used to consult with Polaris, and Arun invested in Maverick in the year 2000. And that's the investment with which we actually experimented and built Maverick. So to that extent, after that, we did not raise any funds. At this point of time, looking at the next 5 years, we thought that we should actually pivot the company into operations and technology transformation partner, that is AI led operations and technology transformation partner. And in view of that, we have been working over the last 9 months with regard to identifying the right offerings and, more importantly, building the right competencies to support those offerings. So we are using all the reserves that we have as well as debt to an extent of 30 million to pivot the company in that direction.
So what is this space? For example, if you can help understand operation and
See, within the banking operations, the priority focus that we have taken is that inbound and outbound customer servicing. We have taken regulatory and compliance, and we have taken lending and wealth management as the four areas in which we want to actually implement AI at scale. Now, it's a nice thing to talk about a few minutes about AI at scale. In the initial stages, customers wanted to experiment and understand and thus get familiar with AI. So most of the AI investments have been more in terms of one or two use cases across the bank. They never really looked at a given function. Like if you take the lending portfolio, they have not looked at revisioning lending in light of the capabilities that one has now with regard to AI or NLP or ML. So today our idea is to get a bank, especially the tier 2 and 3 tier banks, which is our sweet spot, to revision a given portfolio top down and then identify a set of use cases. There could be 15 to 20 use cases, which, when implemented holistically, would almost re engineer the entire portfolio in a way that they get much more effective with regard to customer experience, much more effective with regard to their revenue and cost, and much more effective with regard to compliance. So what we are trying to do is help banks revision their portfolio rather than trying to identify a few use cases here and there and giving them some kind of a productivity gain. It is almost revisioning. So AI at scale is the kind of platform or a framework that we have developed, and we are actually working with customers to transform or revision a portfolio using AI, ML, and NLP competencies.
so to refresh, so you're trying to say it's an end-to-end AI solution instead of just a point use case which you're trying to implement.
Yeah, yeah.
So what will be that application be? For example, lending. You mean in terms of loan dispatching, verification, like what? So just an example to get a hang of it.
See, it'll start off like, say, basically, if you take lending, origination is one piece of lending, and then comes loan servicing, then comes closure. So, not looking at each piece separately, rather, you look at the entire lending portfolio and say, what are the three things if we change at the business parameter level, will we get leadership in lending portfolio? And then working backwards and seeing, because of those objectives that we need to realize for leadership, how would origination change? How would servicing change? And how would closure change? And then looking at the application portfolio and almost revisioning it rather than tinkering with it. So that's what we are talking about when we say AI at scale. Similarly, we also are applying AI to change the SDLC life cycle. Like you would have heard of the waterfall method, then the agile method. At this point of time, you have sufficient proven tools and platforms that actually help you on the requirement stage to automate the requirements gathering and finalization stage, converting those requirements into some kind of epics and beyond the epic into code. And once the code is generated, doing some degree of automated testing with regard to, be it unit testing or system testing or acceptance testing, in an automated way, thus shrinking the overall software development life cycle at least by 30 to 35%, while also having an ability to reduce the overall effort in the similar manner.
But that means lesser developers also.
Lesser developers, yes, definitely lesser developers. That's the reason I've been telling you that IT services model is up for change. Even I'm going to be impacted by it.
No, you will not be replaced by an AI.
No, no, what I'm saying is, even I means not as an individual, as a company, Maverick will also be impacted by the fact that there will be a smarter way to do what we have been doing so far. And the earlier I adapt that smarter way, the better it is. And probably for people, companies like Maverick, which are only 2,200 in scale, it could be a little more easier to adapt and survive as compared to large systems wherein it's going to put a severe demand on them with regard to changing their model on the fly when they're actually having such a scale.
And I want to touch upon 2 points. The first is acquisitions. Have you guys done any acquisitions in the past, or this is not something you guys?
We've been, see, acquisition agenda came about only in April 2024, and we were focused on acquiring in the US market. Primarily, we entered US market very late as compared to, like, we moved from India to Middle East to UK and Europe, and US was the last territory that we entered. While we have about 40% of our revenues coming from US territory, our client footprint is very minimal there, about 3 to 4 customers only, while we have a total of about 40 customers. So from that angle, in order to increase the footprint in the US, we were looking at identifying a total of 30 million revenue to be acquired, more for customer base rather than revenue in the US. We started that in April, and we focused on looking at regulatory compliance as a focus. The companies which have competency in regulatory compliance were identified. So we did work with a investment banker, and we identified about two of them as of December, two prospects as of December. So we are yet to close with the options there. Similarly, in the domestic market, we are also open to smaller acquisitions in the range of about 5 million USD. That is more for competency, especially when you are talking about operations and technology transformation in operations and technology space. In order to quickly build the competency, we were wanting to make two acquisitions in domestic market, which we have not yet briefed any. We have not identified the targets, or we have not commissioned a project yet. Whereas in the US, we have done, and we do have two options, which we will probably exercise in the 25-20.
And all through internal accruals, or
See,
mostly?
we have lined up 30 million through internal accruals and debt. So that's what we lined up first, and then we went to market in the US, and we will be getting to market in India.
And for an IT company, I mean, this is a big question which always comes, like software companies, especially. Um, how easy is it to get a debt? I mean, your size have exceeded. I mean, as you're a certain size, but for
See, it
smaller,
is based on your what do you call your, like, your earnings.
yeah. But there
Yeah,
is no collateral, right? It's just software. It's just IP, right? For a manufacturing, it's much easier. The formula.
true. See, our bankers have, I mean, women, I don't think there is an issue as long as you're having the reasonable financial health. I would say reasonable, because we are in our EBITDAs are not like the tweets, and we are in the early teens. So to the extent with that, we are able to definitely get reasonable support from the banks.
And then to wrap it up, any plans to do an IPO?
Not really, like, definitely fundraising is required. And is it going to be through IPO or the other options? We are quite open to that. So to that extent, we need, apart from what we have already arranged as debt, maybe another 40 to 60 million. And we need to see whether if 40 to 60 million is going to be sweet for an IPO, or the other options are always there. So we are not yet closed with regard to the choice, but we also need to see how the market is with regard to the IPO. You saw an IPO coming up yesterday. So we need to also take the circumstance at the time when we raise the capital. So we're keeping the options open rather than trying to say this is the only route to raise capital.
But on a side note, what is happening in the market? It's all red.
It's all red. Yeah, 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 yeah.
Any insights you have? What's happening? It's a question which keeps coming, but I don't know what to believe, what not to believe.
I really would not like to speculate on it, but definitely, yes, there's going to be a reasonable, what do you call,
Okay.
rejig with regard to valuations. And those who are actually in a position to evolve new delivery models, pricing models, would then get probably rewarded. Next 24 to 30 months are nice to actually be cautious and see how to adapt.
Awesome. Great. Thank you so much, Mr. Ranga, for your time. It was such a pleasure to talk to you and understand how things are shaping up in this particular space. Quite an interesting space to be in for sure. We really appreciate your time. Thank you so much.
Yeah, in fact, when you said it is fifth year of Maverick, I was actually dialoguing with my colleagues. It is looking like with the kind of technology maturity that is happening and the kind of demands that are being placed, both with regard to on the industry as well as the service providers. I think this is a time where we are almost thinking that there is a good chance for rebirthing Maverick, so to say, and making it as relevant as we can for the times to come. Thank you very much, and pleasure talking to you.
Thank you.